Ripple didn't just want to compete with USDC, they tried to buy it. A $5 billion offer, quietly made and quietly rejected, that exposed just how far Ripple is willing to go to control the future of stablecoins. The acquisition never happened, but the fact that it was even on the table says a lot about Ripple's strategy, about Circle's ambitions, and about the battle unfolding beneath the surface between the biggest players in crypto's money layer. My name is Danielo, and today we're diving into the story behind Ripple's failed attempt to acquire Circle, why it matters, and what it means for XRP, RLUSD, and the broader stablecoin landscape. If that sounds interesting to you, make sure to hit that subscribe button and ring the notification bell so you never miss future crypto updates. Alright, let's get into it. In late April, multiple reports confirmed that Ripple made a private $4 to $5 billion offer to acquire Circle, the issuer of USDC. The story was first broken by Bloomberg and later verified by Decrypt and The Street. While Ripple hasn't officially commented, sources familiar with the matter say the offer was rejected. Quiet deal, quiet denial. But the implications are anything but quiet. At a glance, this might seem like just another failed acquisition in crypto, but the timing here changes everything. Circle had just filed for its long-anticipated IPO weeks prior. Meanwhile, Ripple has recently launched RLUSD, its own stablecoin, and was starting to build momentum across a handful of exchanges. So the question isn't just, why did Circle say no? It's, why did Ripple make the offer in the first place? To understand the significance, you have to think about what USDC actually represents. It's not just the number 2 stablecoin by market cap. It's plugged into nearly every part of the crypto economy, from Coinbase and institutional DeFi to major payment rails like Visa. Acquiring Circle wouldn't just give Ripple a larger stablecoin, it would give them USDC's entire distribution engine, complete with regulators, banks, and product market fit already dialed in. Put simply, Ripple didn't want to compete in the stablecoin war, they wanted to buy the winner. That's a very different kind of ambition. It also tells us that Ripple sees RLUSD not as a side project, but as a strategic core. And it confirms something we've been seeing across crypto lately. The real battle isn't just about tokens anymore, it's about who controls the infrastructure beneath them. So now that the offer's been rejected, what does Ripple do next? And just as importantly, why did Circle walk away from billions? To understand Ripple's motivation, you have to step back from the token price and look at their positioning. Ripple isn't just building for users, it's building for institutions. That's been their entire pitch since day one. And when they launched RLUSD in late 2024, it wasn't just about entering the stablecoin market. It was about owning a core financial primitive they could fully control. But growing a stablecoin organically is tough. Even with Ripple's distribution, RLUSD is still a newcomer in a field dominated by USDT and USDC. Getting trust, integrations, and liquidity takes time, and in crypto, time is expensive. So instead of waiting years to scale RLUSD, Ripple tried something bold. Acquire Circle, and instantly absorb everything USDC has already built. Regulatory frameworks, SEX listings, DeFi protocols, payment rails, and enterprise trust. It wasn't just a stablecoin play, it was a shortcut to becoming crypto's default financial layer. Circle, after all, doesn't just issue USDC. It also operates a powerful backend for stablecoin settlements and on-off ramps. They're tightly aligned with US regulators and partner with companies like BlackRock and Visa. If Ripple had pulled this off, they wouldn't just inherit a product. They'd inherit infrastructure, compliance, and distribution across both TradFi and DeFi. It also fits a broader pattern. Ripple has been leaning hard into acquisitions lately. They bought Medico, a crypto custody firm for $250 million, and Hidden Road, a prime brokerage platform for $1.5 billion. A Circle acquisition would have leveled that up massively. So the question wasn't just, can we grow RLUSD? It was, can we skip the build phase and just buy the pipes? That's what Ripple was really after. From the outside, rejecting a $5 billion offer might seem risky, but for Circle, the decision wasn't just about money, it was about positioning. Just weeks before the offer was made, Circle filed for its long-anticipated IPO. This wasn't just some speculative plan. According to their S1 filing, they reported over $1.6 billion in revenue for the previous year. That kind of traction doesn't just suggest confidence, it signals that Circle sees itself as a leader, not a sell-off target. Circle wasn't acting like a startup looking for an exit. They were acting like a company trying to define the standard. The math also matters. Back in 2022, Circle was valued at $9 billion in its SPAC deal with Concord Acquisition Corp, though the merger was later scrapped. Ripple's offer came in well below that, which likely looked like a lowball in the eyes of Circle's board. Why give up majority control to a competitor, especially when public markets could offer both capital and independence? Quick thought, would you have taken the deal if you were Circle, or held out for the IPO play like they did? Let me know in the comments. But it wasn't just valuation. Circle's brand is built on regulatory alignment. It's arguably the most US compliant stablecoin issuer in the space. Partnered with BlackRock, integrated into government conversations, and operating as a known entity in Washington, Circle has worked hard to position itself as the quote safe choice for institutions. Being acquired by Ripple, a company that's still weathering legal battles with the SEC, could have compromised that image. There's also the narrative angle. Circle doesn't just want to be part of crypto infrastructure, it wants to be the infrastructure. Accepting Ripple's offer would mean becoming a feature in someone else's ecosystem, rather than staying the platform others build on. So, from Circle's perspective, saying no wasn't rejection, it was reinforcement. They're betting on autonomy, regulation, and public markets to carry them further than any acquisition ever could. With Circle off the table, Ripple's only option is to double down in its in-house stablecoin RLUSD, and they're already doing just that. Launched in December 2024, RLUSD has quietly gained traction, recently crossing 300 million in market cap. That's not groundbreaking compared to USDC or Tether, but it's a meaningful signal that Ripple isn't just experimenting, it's building a core product. They're not just listing it and calling it a day, they're embedding RLUSD in the financial layer, piece by piece. The stablecoin has been integrated into Ripple's cross-border payment suite, is available on major centralized exchanges like Kraken and Bitstamp, and recently went live on Aave V3's Ethereum market. These aren't minor listings. They show that Ripple is actively seeding RLUSD into both retail and institutional liquidity flows. And the strategy here is classic Ripple, own the pipes. With Medico handling custody, Hidden Road providing brokerage infrastructure, and RLUSD sitting at the center, Ripple is building a vertically integrated stack. From stablecoin issuance to global payments, everything is moving towards control, cohesion, and direct monetization. But if RLUSD fails to gain serious traction, Ripple's broader ecosystem plans could hit friction fast, because without a strong native stablecoin, the rest of the stack doesn't move as cleanly. Still, the Circle offer shows they're not content playing catch-up. Ripple wants to make RLUSD a pillar of its broader vision, a settlement layer that connects TradFi rails, DeFi protocols, and enterprise flows. And the more friction they encounter scaling it from scratch, the more aggressive we can expect them to get in how they grow it next. At this point, it's easy to treat stablecoins as background noise, just another tool in your wallet or another liquidity pair on an exchange. But what's happening between Ripple, Circle, and Tether is something much bigger. It's not just about stablecoins. It's about who controls the financial plumbing of crypto itself. Right now, Tether dominates on volume, especially outside the US. It's fast, liquid, and deeply embedded in offshore exchanges and cross-border flows. But it's also notoriously opaque, with limited transparency and almost no presence in US regulatory conversations. USDC is the exact opposite. Circle has built its entire brand around transparency, compliance, and being the quote regulated choice. It's the stablecoin that integrates with payment giants like Visa and shows up in institutional DeFi products. Even though its market cap lags behind Tether, its footprint in the real-world financial system is arguably more valuable. Then there's Ripple, coming in with RLUSD and a very different approach. Instead of just offering another compliant stablecoin, Ripple is trying to own the entire stack: custody, issuance, settlement, and global payments. It's not just issuing a token, it's rebuilding the rails those tokens move on. That's a far more aggressive strategy. Think of it this way. Stablecoins are becoming the default settlement layer for crypto and, increasingly, real-world assets. Whoever controls that layer doesn't just win market share, they influence how capital moves through the entire ecosystem. Exchanges, wallets, payment platforms, they all have to build around that liquidity. And that's the real power struggle. Tether owns scale, Circle owns trust, and Ripple wants to own infrastructure. The fight isn't over the price, it's over positioning, and that's what makes this story so important. So, where does all this leave XRP holders, RLUSD users, and people building in Ripple's ecosystem? First, it confirms something we've seen building for a while. Ripple is no longer just focused on XRP the asset. The company is expanding into a full-stack infrastructure provider. If you hold XRP, that doesn't mean the token is irrelevant, but it does mean Ripple's value proposition is diversifying. It's no longer just a bet on cross-border payments or SEC clarity. It's becoming a bet on Ripple's ability to dominate stablecoin flows, enterprise finance, and global settlement layers. If Ripple succeeds, XRP could become more than just a token. It could be the native collateral inside a stablecoin-powered financial stack. For RLUSD users and stablecoin farmers, the implications are equally real. Ripple isn't just launching a token and hoping it sticks. They're actively plugging RLUSD into high-volume payment rails and pushing for exchange adoption. That opens the door for future incentives, deeper liquidity, and newer financial products, especially if Ripple starts rolling out RLUSD native lending, borrowing, or cross-chain functionality. And for builders, this is an opportunity and a signal. Ripple's infrastructure is expanding fast, and that creates room for wallets, protocols, analytical tools, and payment apps that want to tap into this growing vertical. While RLUSD might still feel new compared to USDC, the pace Ripple is moving suggests it won't be a side project for very long. The bigger takeaway is this: Ripple made a $5 billion move, got denied, and didn't flinch. That kind of ambition tells you they're playing the long game, and if you're holding XRP or building anywhere near the Ripple ecosystem, it's worth understanding what that long term might look like, because they're clearly not done making moves. Ripple's offer to buy Circle might have been rejected, but it wasn't wasted. It gave us a clear look at what Ripple wants, not just relevance, but control. Control over the flow of capital, the infrastructure it runs on, and the next phase of crypto's financial stack. And while Circle said no, the story doesn't just end there. Ripple still has RLUSD, still has deep pockets, and still has a roadmap that's clearly bigger than just XRP. The stablecoin wars are far from settled, and the players involved aren't moving casually, they're moving very strategically. What we're watching right now is a shift in who holds power, not just on-chain, but across the bridges connecting crypto to real-world finance. And if stablecoins continue to evolve into the default settlement layer for the Internet of Value, this battle between the infrastructure providers is only going to get more intense. So, what do you think? Did Circle make the right call walking away? Or did they just turn down a shortcut to scaling even faster? And where does Ripple go from here? More acquisitions or a full-force RLUSD push? Drop your take down in the comments. I'll be reading through them. If you found this breakdown helpful, make sure to like the video, subscribe, and tap the bell so you don't miss what's coming next. Thanks for watching, and I'll see you in the next one.